So money capital right now is not really scarce at all. And that's why you see such low interest rates. There's not much bidding for money right now because it's not scarce compared to the needs of the industrial capitalists, um, to produce their desired amount of commodities. Um, so whatever the profit rate is, the lion's share of it is going to the industrial capitalists right now instead of the money capitalists. And what this should do over time, over in the near future, is create more and more of an apparent incentive for industrial capitalists to invest in new production. That's assuming that the base profit rate itself is high enough. I mean, to be fair, it doesn't matter whether the profit rate is split up to give money capitalists or industrial capitalists the lion's share of the overall profit rate if the overall profit rate itself is very low. If the basic profit rate itself is low, then it doesn't matter how it's divided up. Industrial capitalists won't want to invest in production. So capitalism does still, quote unquote, need to expand relative surplus value, attack the living standards of workers, decrease wages in order to bump that base profit rate up again against the long-term tendency of the rate of profit to fall, which I think authors like Michael Roberts have demonstrated very convincingly is still very much in operation and is definitely a long-term problem for capitalism right now. But in terms of cyclically, whatever the profit there is to be made, the lion's share of it is going to be going to the industrial capitalists rather than the money capitalists for the foreseeable future. Now, if world gold production starts to stagnate and decline, as I think we're starting to see in the first quarter of 2016, based on what I've read, and it starts to go back down as commodity capital then continues to race ahead, then once again we will be in a boom time, in an unsustainable boom, where we'll be setting ourselves up for another crisis. But I don't think we're there yet. These lines have not crossed each other yet. There's still quite a bit of boom, left in the system before we get another really severe crisis. All right, we're basically right about here. If you look at the previous industrial cycles, it's almost like we're around 1990 or so. And of course, there was a minor recession in 1990-91. We might get more, minor recessions in the near future, but at least for the next, I'd say 3 or 4 years, there should be a lot of gas still in the gas tank, a lot more fuel to fuel a huge boom, a significant boom before the next serious crisis. All right, which is why I don't agree with all of these Marxist economists and other economists who are foretelling some imminent breakdown of capitalism, some huge recession coming. Not yet. I don't see it happening anytime really soon. I mean, maybe 3 or 4 years from now, once the next boom has exhausted itself, once we get to right about here, and these lines have crossed each other, and once again, commodity capital production has outstripped the ability to purchase it, the market for itself, then we might be talking about another serious crisis. But I don't think we're there yet. I think there's still a lot of fuel in the gas tank left for another big boom. So this would not be the time, I think, to invest in gold. This would not be the time. The time you want to invest in gold is right about here. All right. At this point in the industrial cycle, right before the peak, all right, most of the market participants have not realized that there's an underproduction in money capital and money commodity. All right? They're still blind to it. And this is where you would want to jump in and buy gold. All right? Conversely, this is where you want to sell gold. This is, at this point in the industrial cycle, this is when most people have yet to realize that there's an actual deficit in commodity capital production, and there's actually kind of a relative surplus in money capital production. All right. So here's where, 2010, 2011, this is where gold was, you know, $1,900 an ounce. It was up at crazily high prices, and that, of course, spurred gold production to, to increase. But, this is where you'd want to sell gold in this part of the business cycle. Buy gold here, sell it right here. Conversely, you want to sell your commodity capital right around here, and also your investments in commodity capital, which means stocks, real estate, all that kind of stuff. Real estate technically is a more complicated case, but because only part of it is a commodity. There's also the ground rent from land, which I won't get into right now. But this is where you'd want to sell your commodity capital and your investments in commodity capital. If you're an industrial capitalist, you want to sell your factory right here because commodity capital is being overproduced. All right, there's about to be a crash. Your commodity capital is about to be written down quite a bit at this part in the business cycle. So you'd want to sell your commodity capital and buy money capital this part in the business cycle. Conversely, you'd want to buy commodity capital and sell money capital right around here. Sell your gold, buy productive assets to engage in real production, because it's commodity capital that's scarce here, and it's about to enter into a boom phase. And I think we're still really in the situation where you'd want to sell gold and buy commodity capital, buy actual productive, engage in productive investment, buy productive assets. Now, certainly there are parts of the stock market that are way overvalued right now. There are certain asset prices that are way overvalued. All the Facebook and so-called FANG stocks, I think, are way overvalued. It's kind of a fad right now. It's going to collapse as people realize that there's actually not a lot of real revenue coming into these companies. They've kind of been built on sand, built on the promise of future revenue. But in terms of their real advertising revenue, a lot of the cases, they haven't actually really started to break even. So I think those things are overvalued. There's probably some other things that are overvalued, but there's money to be made somewhere in real productive assets at this part of the business cycle. I'm not here to pick stocks and tell you which ones to get, and I'm not even sure that the stock market itself as an index is a good place to be, because it might be overvalued right now. But there's some sort of real productive asset, some sort of real production to invest in to make money somewhere in here right now, where we are still in the business cycle. All right. We are not near another crisis because we haven't had the boom phase totally play out yet and get to an unsustainable level to where it then starts to crash back down to the level of money capital to actually circulate and purchase all of that commodity capital. Right now, commodity capital is still scarce. So I think we still have some boom times in ahead of us for the next 3 or 4 years. Although what form it will take, there might be just horrible inflation if that huge monetary base that the Federal Reserve has created actually starts to get loaned out, as if loans start getting made on top of those those capital reserves in dollars that the Federal Reserve has created. I don't know, it could create inflation. There could be turbulent times ahead, but I think overall we're in store for some boom times in the next near future.